Hello, everyone, and welcome to ESG Matters. Today, we take a closer look at the shifting landscape of ESG investing, where it started, where it's headed, and why its ultimate success might be measured not by its growth, but by its integration as a distinct category. As fund analyst Kai Ebisawa of Matsui Securities puts it, the real goal of ESG is not to create more ESG funds, but to reach a point where ESG as a term is no longer needed. The indicator of ESG success will be when environmental and social factors are seamlessly integrated into investment decisions, not as a specialty but as a standard business practice. Over the past few years, ESG has seen both rapid expansion and subsequent slowdown. ESG mutual funds experienced a boom between 2020 and 2021, fueled by increased awareness and regulatory support. However, since 2022, global ESG investments have declined by 14%, falling to $30 trillion according to the Global Sustainable Investment Alliance, GSIA. In Europe, tightening regulations on greenwashing have reshaped the market, ensuring ESG claims align with measurable impact. In the U.S., ESG has become politically debated, with conservative lawmakers pushing back against ESG-focused financial strategies. In Japan, the trend is similar. As of late 2024, Japan's ESG fund assets totaled 3.3 trillion Japanese yen, making up just over 2% of all mutual funds. ESG fund launches peaked at 76 in 2021 but have since declined, with more ESG funds closing than launching in 2024. Many of these funds have struggled to maintain long-term performance, raising questions about whether ESG investments can be considered sustainable. Despite these numbers, ESG's integration into mainstream investing is progressing in a broader way. Many funds that do not carry the ESG label are now incorporating sustainability criteria in stock selection, signaling that ESG principles are becoming part of everyday investment strategies. Corporate governance scandals, human rights violations, and environmental risks are no longer discussed solely in ESG circles. They are now key considerations in all business and investment decisions. This brings us to the evolving role of ESG. While some critics argue that ESG investing doesn't guarantee short-term stock performance, its long-term function is risk mitigation. Companies that consider stakeholders beyond shareholders, such as employees, customers, and communities, tend to build more adaptive business models. They are better prepared for evolving regulations, social expectations, and climate-related risks, positioning them for long-term stability rather than short-term financial gains. From a global standpoint, the decline of ESG-branded products may actually indicate a shift rather than failure. If sustainability considerations become standard practice rather than a specialized category, ESG will have achieved broader adoption, not as a trend, but as an integral part of corporate and investment strategy. We'd love to hear your thoughts. Do you think ESG should remain a separate investment category, or should it become a standard for all investments? How do you see the role of ESG evolving in the investment world? Comment down below. Thank you for joining us on ESG Matters. Stay tuned for more insights into the trends shaping the future of responsible and sustainable investing.